Hey guys, Angel here with the Bullish Bears team. I'm going to make this video on the difference between a bull market and a bear market. So let's talk about what a bull market is. And that is the financial market of a group of securities in which prices are rising or are expected to rise. So when we're in a bull market, things are looking great. Investors have a bunch of optimism, everybody's really excited, and stocks are continuously moving upwards. So what is the opposite of a bull market? That would be a bear market. And a bear market is when securities prices fall and widespread pessimism causes the stock market's downward spiral to be self-sustaining. Investors anticipate losses as pessimism and selling increases. So if we're looking at the market today, because let's face it, the market has gone a little bit crazy. So we're looking even just right here. It's been looking pretty yucky, right? So it's continuously moving up. It's hitting all-time highs. It's trading in a bit of a range, and then all of a sudden, boom, it goes down. So does that mean that we're in a bear market? Does that mean that we need to just get rid of everything and just sit it out, wait to see what happens, and then we'll get back in later on? Not necessarily. It's important to know the difference between a bear market and a market correction, because when the market is at an all-time high, like it was a couple of weeks ago, people are going to want to take their profits. And when they take their profits, that's going to obviously cause the market to drop a little. And right now it's earnings season, so it's a little bit crazy with the markets, and emotions affect markets. Emotions move markets. News moves markets. So there's been a lot of news, there's been a lot of craziness going on in this world, and that's affecting the stock market. So it's important to know how to rein in your emotions, to know the difference between a bull market and a bear market, and even a market correction. With a market correction, you can find a bottom and get in a stock at a good price to ride it back up so you have a better profit potential. Whereas a bear market, you think you found the bottom and you didn't. It just keeps going down. So it's really hard to go long term in a bear market because that bottom is really hard to find. So that can change the way that you invest and you trade. Emotions, again, move markets. News moves markets. So does that mean that you can't be a long-term investor right now? Not at all. But sometimes it's smart to take your profits, and then you can get back in. I mean, everybody loves a good sale, and that's what a market correction is. A bear market's a little bit different, and there are 4 phases of a bear market that can help you understand more about it. So it starts at the peak, when it's at an all-time high. Traders begin taking their profits, and that means that the prices begin to fall. And as prices begin to fall, then the second phase begins, and that sees dropping prices, and then all of a sudden people start getting a negative outlook, and pessimism comes in, and the panic selling begins, which brings in the third phase. And as prices are cheaper, the bulls start becoming enticed. They see that and they're like, ooh, that stock looks nice. I like a cheap stock. Because what is the ultimate goal of trading? It's making a profit. So if you aren't shorting or buying put options, then you're going to want to go long. And that means that you're going to want to make money by getting a good entry. So they start seeing these cheaper prices and they start to come back in. So prices start to rise. That brings in trading volume, which brings in the fourth and final phase of a bear market. So prices are still dropping, but the drop slows exponentially, which attracts even more buyers. That causes the beginning of a bull market. Now with a bear market, the market has to drop at least 20% over a period of a couple of months. So if we're taking a look at this here right now, you couldn't really call that a bear market, because prices, it hasn't been that long. So what could happen? So if you're looking at this, like, is it going to keep going, or is it going to keep dropping, or is it going to go back up? Like, you don't know. So it's really important to know candlesticks, patterns, and technical analysis. So if I'm looking at that, I can see that it kind of broke out of a descending triangle, and I'll show you what I mean by that. So if I draw my trend lines, that's kind of a bad one, so let me redraw it, because you want to connect those points. And then let me change my tool, and I'm gonna say like right here, because it hit that 4 times, 5 times, and it didn't break until today. So you can see this descending triangle, which is a bearish pattern. And what did it do? Instead of going back up, it broke down out of it today. You can see that the 200 SMA has been a strong level of support for quite a while. You can see it hit back here, back in April, May. Let's take again a look in February. So if we're looking at this, we see price rising, and then all of a sudden, boom, it tanks. And if you're trading the stock market at that time, you're like, oh my word, the sky is falling. But what did it do? It went back up, then it started going back down again. So it's that roller coaster of the buyers and the sellers fighting each other. And there were times that people thought we were going into a recession and into a bear market during these times, but you can see that it sort of like took a breather because it was so overextended. If you look at the RSI, it took a breather, and then it continued to go back up and made an all-time high. And then it traded in a range, and then boom, it started tanking. And so we're looking at that, and would you have said that that was a bear market back then? Yeah. Maybe, but it actually wasn't. It was probably just a market correction. It found a bottom here at this 200 SMA, and then continued to go up. Now, where it's a little different is that it was trading around the 200 SMA, and then it sort of just broke down below it. And if we actually take a look at these levels here, you can see that it's hitting another angular support level. If it breaks that, then that could be really bad, and it can continue to go down, which then could usher in the start of a bear market. So it's really important as traders to know patterns and candlesticks and technical analysis, because that is going to change the way that you trade. Like, you want those buy and sell signals. The patterns and the candlesticks, technical analysis, those aren't a magic 8 ball into the future. You're not going to look in there and say, oh yes, the stock market is going to keep going down. But you can see where the 9 and 20 crossed over here, and then boom, it tanked. And it's failing the 200 SMA right now. We'll see what it does. So if it fails that angular support, you might want to start getting worried about where the stock is going. So as a new trader, or any type of trader, it's really important to be able to read the patterns and technical analysis. So like myself, personally, I like to swing trade. I'm a big fan of swing trading options, and I like to day trade options as well. And the market's so stinking crazy right now that I'm terrified to hold overnight. I don't want to lose money. And I've gotten myself into trouble where I'm like, okay, I know what the stock is going to do, and I'll hold, and then it goes the opposite direction, and then I end up taking a loss. So right now, for me, it's just too crazy, and I don't want to lose my profit. So knowing the difference between a bull market, a bear market, and a market correction can change the way that you trade, and it's important to know candlesticks and patterns and technical analysis, because trading is actually really, really fun when you do it right. And a lot of people don't want to take the time to learn because they want to make their money right then and right there. But that's probably the worst way to trade, because then you end up losing money because you don't know where the market is going. I mean, these aren't going to tell you the future, but it does sure help a whole lot. So if you want to learn more about bull and bear market in written form, then you can check out the blog written by yours truly. And we have our courses over here if you need to learn more about candlesticks and the different kinds of trading, like day trading, swing trading, and options trading. And if you like this video, then just give it a like and a share, and follow us on YouTube, so that you can get more notifications whenever I make videos, because come on, let's face it, I'm a whole lot more fun than the guys. And I hope you guys enjoyed this video, and we'll see you next time.